Yet again, I'm back, your host in today's video presentation. Luando Franklin is my name, the lead tutor, the Chief Executive Officer, the pioneer of FCO Accountants Tuition Center. In today's video presentation, we are going to look at one element of cash flow statements, and that is how to prepare the PPE account. The property, plant, and equipment account must always be prepared when you are dealing with the statement of cash flows. The purpose is to determine either the cash outflows from the purchase of property or the cost or carrying value of the asset that has been sold. Before we get started, I just want to explain that this video presentation is applicable to the students who are studying SCCA knowledge, financial accounting, SCCA skills, financial reporting, and also SCCA strategic business reporting, and also CA under Zika, CA 2.1 that is applicable, and CA 1.1 is applicable, and CA 3.1, it is applicable. Before I get started, I just want to encourage our viewers to ensure that you ask questions specific to the topic in the chat box. All the questions that will be raised will be attended to if time will allow. If your question is not attended to, simply means there were too many questions and therefore we could only handle a few. I also want to encourage our viewers to make comments on this video in the comment section. The comments that will be raised will be taken very, very seriously and will be used to improve our delivery for the benefit of our viewers. For the new subscribers, I want to encourage you to ensure that you hit the notification button so that you are able to receive notification about the availability of new videos. Also share and like. So I'm now going to explain the question and answer it together. The company is preparing its statement of cash flows for the year ended 31st December 2022. Relevant extracts from accounts are as follows: statement of profit or loss, depreciation, profit on sale of a non-current asset, we are told, statement of financial position, we are given the previous year 20x1 and the current year 20x2. Plant and machinery additions during the year were $35,000. What is the cash flow arising from the sale of non-current assets? Now, the most important thing to note here is we are given the profit made from the sale, which is 40. Now, I want you to understand that in order to calculate the proceeds, first we compare the cash proceeds. This is important. Cash proceeds from the sale. Then compare with the carrying value of the property sold. And then we have a profit or loss. Profit or loss. That is the figure there. So I want you to understand that when the cash proceeds is higher than or greater than the carrying value, there will be a profit. If the cash proceeds from the sale of a non-current asset is less than the carrying value, then there will be a loss. Now, I want you to pay particular attention. In this question, we know the profit on the disposal, but we are not given the cash proceeds. Therefore, we need to find out the carrying value of the asset sold, the carrying value. So there are two ways of working out. I'll show you the easier one, which is quicker, is to prepare the PPE at carrying value. So carrying value, that is PPE account. The PPE account, we have the debit and the carrying value. So here, the carrying value will be the cost less accumulated depreciation. So this will be 200. The balance brought forward, 200,000. Normally, there will be revaluation surplus, but in this question, we don't have revaluation surplus. It's not there. But we are told there were additions. The bank is what was acquired. Bank 35. Then disposal here will be the carrying value because the assets are at carrying value, which we don't know. In this account, we also show the depreciation charge for the year. The depreciation charge for the year, we are told it's 15,000. The closing balance. Closing balance will be there. This will be 140. The cost is 185,000. The depreciation is 45 from 185, that will be 140. Therefore, we have the total here is 235. 235. And then here we have 165 from 235. That will give us 80,000. The 80,000 is the carrying value of the asset that has been sold. So in this account, you can find either what has been acquired or what has been sold at carrying value. Or you can also find out, if you're not given the depreciation, it can be the balancing figure. So in this case, what was missing was the disposal of an asset at its carrying value. So if we know the carrying value, then we can find what was received by comparing disposal, disposal proceeds, which we don't know, but we can find it. Disposal proceeds, we don't know, but we know the carrying value. We have calculated 80. And we are given the profit. The profit is given, which is 40,000. Profit 40,000. We said that there is a profit when the proceeds is greater than the carrying value. So if it's to be great, then you add 80 plus 1 plus 40. The disposal proceeds will be 120,000. And from the objectives there, we have C as the answer. Now, there is another method that you can use using the cost. If you are using the cost, you have to do a lot more. There are some times when you are not given the carrying value, you cannot determine the carrying value. So which means you do not have an option. You just have to use the cost. So let's look at the cost. Okay. So under cost, we go to the cost, which will be PPE account at cost. Then we use the cost. We have the debits outside, the credit. Then we go to the balance. The balance brought forward, which is 250. That is cost. We have, there's no revaluation surplus. But we know the additions, bank, $35,000. We know the closing there, 185. One very important point when the account is at cost, we don't show depreciation. Please take note of that. So now the missing figure here is disposal at cost. Total here 285, which is taken to the other side. And then we have 185,000 less 185, this will be 100. So 100,000 is the cost of the asset. But we need to find the carrying value of the asset sold. Therefore, we need to prepare the allowance for depreciation in order to determine what was the depreciation on the asset sold. So there we have allowance for depreciation. Allowance for depreciation account. We have the balance here. The balance brought forward. We have depreciation is given, there it's 50. The charge in the P&L is also given, 15,000. The closing balance Closing balance is also given 45,000. We have 65. We have 65. The missing figure here is the depreciation on the asset sold disposal. So the balancing figure there is 20. So 20 is the depreciation on the asset sold. Therefore, the carrying value will be cost less depreciation charge. So the cost there was 100. Depreciation 20. Carrying value 80. So whichever method you use, then we can use now the carrying value to determine what was received. So that is how you deal with the property, plant, and equipment when you are dealing with the statement of cash flows all the time. That will be there. For today, we can end here. On behalf of FCO Accountants Tuition Center, I just want to thank all those who have been supporting us from the inception of the introduction of FCL Accountants Tuition Center YouTube channel. Thank you, and may the Almighty God Jehovah bless you beyond measure.